So welcome back guys to my YouTube channel. So in today's video I'll be showing us how to make use of the stochastic indicator together with the moving average 10. Okay, so the way we are going to be making use of this strategy is to wait for the confirmation that we are going to get from the stochastic indicator together with the moving average. Okay, so whenever we see the stochastic indicator and the moving average below the level 10, then we are going to take like a buy in the market. So we are going to be using this strategy to catch like a spike in the market. Okay, so remember that this is the 5 minutes time frame, so we are just going to be using this strategy to catch a spike in the market. Okay, and we are going to be using this strategy on the boom 1000 index market. Okay, so even if you want to make use of this strategy on any other market, make sure you back test it first, but definitely you'll be able to make use of this strategy on boom 1000 index on the 5 minutes time frame. Okay, so I'll just show us how to make use of this strategy, and then before the end of the video I'll be showing us how to add these particular settings, the stochastic 533 and the moving average 10. Okay, I'll be showing us how to add the indicators on our chart. Okay, so but first of all let me explain how to make use of this strategy. Okay, so before we catch this particular spike on the 5 minutes time frame, okay, it's not going to be okay to just start using this strategy on this particular time frame. If not, we are going to end up with losses. Okay, so for us to be able to make use of this strategy successfully on the 5 minutes time frame, then definitely we want to go to a higher time frame like the 4 hour time frame. Okay, and what we are going to do on the 4 hour time frame will determine if we are going to successfully catch this spike on the 5 minutes time frame. Okay, so on the 4 hour time frame, we are going to look for our ranging markets. Okay, we are going to look for a ranging market on the 4 hour time frame. Okay, we are going to look for a ranging market or a market that is moving in between support and resistance. So when we talk about a ranging market, it's a market that moves in between support and resistance level. Okay, so if you are able to identify this market, then you'll be able to make use of this spike detector. Okay, so if we go to the 4 hour time frame now, what we'll notice is that we are able to identify our ranging market. So I will delete this level here so that I'll be able to show us our ranging market. So we'll notice that price was moving in between this level back and forth. Okay, so whenever we see this, we know that market is in a range. Okay, market is consolidating, and if we move forward we also notice that market also here was in a range. So whenever we see this particular type of up and down movement, okay, that suggests to us that we are in a range, so we can decide to draw our zone here up, and then we can decide to draw our zone also here. Okay, so we are able to spot this particular range here. Okay, and then if we go back, we'll notice that we also have this range here, so we are going to draw our zone also at this particular level here. You notice that market keeps on going up and down in between the support and resistance level. Okay, so this level forms our range here for us in the market. Okay, and then if we are to draw this range here, we will notice that this range is going to tell us exactly when to use our indicators to catch a spike. Okay, so in between this range here, it gives us an idea of where to draw our level. Okay, so when we keep on drawing our level, you will notice that market broke out of that level here. Okay, and then when market broke out of it, so what we want to do is to wait for market to come back to that same level. Okay, and you can see that market actually did come back to that level. So I'm just going to adjust it to somewhere here. So you can see that market actually is respecting this particular range. Okay, so this is what we want to do on the 4 hour time frame, and we want to wait for price to come back to that range. Okay, so after we've successfully waited for price to come back to that range, then we can now go to our lower time frame to be able to catch the spike. Okay, but before we do that, let's just go first to the 1 hour time frame. On the 1 hour time frame, what we want to look out for is a candlestick pattern. Okay, remember I keep talking about the candlestick pattern. So on the candlestick pattern, we can have three types of candlestick pattern we can make use of. Okay, we can have like the engulfing candlestick pattern, okay, where this particular candlestick covers the entire body of this candlestick. Okay, or we can have the inside bar candlestick pattern. Okay, the inside bar candlestick pattern is where this particular small candle is inside of this bigger candle. Okay, and then we can have like a doji here. Okay, we can have a doji here where the buyers and the sellers are moving back and forward. Okay, and so if we look on this particular 1 hour time frame, you will notice that we have like a doji here. Okay, so if we can spot this particular doji or inside bar or engulfing candlestick pattern, then we can now move to the 5 minutes time frame. Okay, so on the 5 minutes time frame now is where we want to see this indicator here, the stochastic indicator, and then the moving average then cross below the level 10 level here. And then once we see that happen, then we can take our buy successfully here. Okay, so it is at this point we should take our buy. Okay, so that market does not kick us out of our trade. Okay, so if we enter somewhere here, then we should be able to catch the spike. Okay, so what we want to do now before we take our profit is to wait for both the black, the red and the green moving average to cross above. Okay, so as you can see now, it's just at this point here we could not take our profit because it was just the green and the red moving average, and now we are having the black moving average. Okay, so we can decide to hold this trade until the black, the red and the green moving average crosses above the level 85. Okay, but if you want to, you can still take your profits once this black crosses here, because already the green and the red moving average has crossed. Okay, but for our entry, definitely we want to enter when the green, the red and the black moving average crosses below the 10. Okay, and then we take our profit, we hold the trade and take our profit when we notice the green, the red and the black has crossed above. Okay, but first of all, we've noticed that the green and the red have crossed above, and here we have the black crossing above, so we can take our profits now, or we can decide to wait for another spike until the green and the red and the black crosses above the level 85. So I'll just delete the indicator here and add it up so that we can know how to add the indicator up. Okay, so for the zoom level, we are going to make use of the final zoom level. Okay, remember we have the first, second, third, fourth and the fifth zoom level. Okay, so we are going to make use of the final zoom level. So let me just go ahead and delete that now. So to add it up, then definitely we are going to add the indicator to our chart, and then we can click on this particular F plus symbol here, and then we can look for the stochastic indicator here. Okay, we can look for this particular stochastic indicator here, and then we are going to make use of these same settings that we see here on my chart. Okay, so you can do well to make use of these parameters the way I have them on my chart and make use of this same level. Okay, and then we can click on save, and then after that we click on this F plus symbol here so that we can add our moving average here. Okay, and then for our moving average here, we are going to make use of the period here 10, then the method, the shift will be 0, method will be exponential, we apply to close. Okay, and then our style will be 2 pixel, and then we'll be having make use of the black pixel if your background is white. But if your background is black, then here definitely should be white pixel. Okay, so and then we are going to click on save. So guys, this is how to add up the moving average and the stochastic indicator. Make sure they both cross below the level 10, okay, for a perfect entry. So thanks guys, please make sure we backtest out this strategy first of all, especially on the boom 1000 markets, before we decide to trade live with it. Okay, if we decide to make use of it on any other market, we want to test it out first before we decide to make use of it, guys. And remember, we'll be making use of it on the 5 minutes time frame. So guys, thanks for watching this video. If you are here to like this video, please kindly do so. If you are here to share it, you do well to share this video so that other traders can get access to this video, okay? And if you are here to subscribe to my YouTube channel, please do that. I really appreciate. So thank you guys for watching this video, and I'll see you in my next trading video. So cheers guys.